G'day Mel. So yesterday's data seemed to put a spring in the step of the government.
It certainly did. The Prime Minister and Treasurer are both very pleased with the outcome of these figures, showing not just that inflation is coming down and is in, at least in a headline figure, in the target range for the Reserve Bank, but that it has come down faster than even the Reserve Bank had anticipated. And that really has the Prime Minister and Treasurer making the case that this is shows a sustained effort and a successful effort in bringing inflation back down. Now, both the Prime Minister and Treasurer are very much at pains to say, look, whether this should lead to an interest rate cut in February is in the hands of the independent RBA. But at the same time, they keep giving the Reserve Bank a little bit of a nudge by saying, look, it's well within the target range of the Reserve Bank that we're given. You have headline inflation, the CPI at 2.4. That's even under the midpoint of the target range. And when you look at underlying inflation, taking out the really volatile items that are calculated, saying even when you take that into account, it's just sitting above 3, but the direction of it and the trajectory is exactly what the Reserve Bank was looking for. So they're very pleased with the fact that this has increased market expectations of a rate cut in February, but also mindful that that's the RBA's job and not the federal government's job.
Yeah, so pretty high expectations that there will be a rate cut. Are there any reasons that the RBA wouldn't do that?
Yeah, it's certainly not a given because as much as there are strong expectations the Reserve Bank will, there are plenty of factors that give them pause for thought. In particular, there's a bit of a differentiation here between inflation on goods and inflation on services. So inflation on goods is really coming down. But when it comes to services, that's where we're still seeing significant growth. So insurance premiums is one example. It's certainly come down from the highs of having gone up 37% over 3 years, but it's still gone up 11% on the year to December. So that's still a very big increase. Likewise, rents is another example where growth in rents is still significant. So the Reserve Bank has to look at the picture of not just goods, but services when it's trying to get a sense of just how costs are unfolding in the economy. And then, of course, they'll also be wanting to see some more labour force data because unemployment remains really low, which is a great outcome, but it doesn't want to do anything that might compromise that effort to get as many people employed as possible. And if inflation were to step up again, which could be caused if wages start rising again, they're very mindful of that too. So it is definitely not a given that they will choose February in which to start cutting rates.
And how could this affect the timing of the next federal election?
That's a good question that only the Prime Minister has the answer to, really. We know that the Labor Party is preparing for an election that they could call at any time between now and, the last possible polling day of May 17. Anthony Albanese has really put an emphasis throughout his term and particularly in the last couple of weeks of saying he always intended to serve a full term, which would suggest a polling date in April or May, but they'll no doubt be ready to mobilise in case they do get a rate cut, think circumstances look good. But in the meantime, they're still preparing to hand down a budget in March in case they want to roll all the way through to April or May. So we still don't know is the ultimate answer.
All right, Mel Clarke, Radio National's political correspondent. Thank you so much for your time.